USDT, the world's largest stablecoin, is facing its biggest threat yet. With Europe's new MiCA legislation, rumors are swirling. Is this the beginning of the end for USDT? And is this the domino that will collapse the entire crypto market? Well, in this video, we're going to break down what this new MiCA legislation actually is. We're going to discuss why people believe it could take down USDT. And most importantly, we're going to discuss what this means for you and your crypto portfolio. So if you enjoy watching videos like this one, where I break down everything that's happening in the crypto market and help you to position yourself for maximum profits in the crypto market, do me one quick favor, smash the like button and subscribe to my channel if you haven't done so yet, because I'm going to be posting regular videos just like this one to help you to maximize your profits in the crypto market. Now, let's dive in. USDT is under attack. It's now the time to get out. In this video, we're going to discuss everything that you need to know about this new MiCA regulation. So, yes, to put this in the wider context, a few years ago, we saw the collapse of Luna and with it UST. And people have PTSD from this stablecoin that previously crashed. I know so many friends that had all of their money parked in this stablecoin UST because they were earning a nice yield, and then suddenly everything went to zero from one day to another. Now, that wasn't the only case where a stablecoin depegged. It was the case, well, it was one major case where a stablecoin UST depegged and went all the way down to zero. But we've also seen other cases where right around the time when Silicon Valley went bust, we also saw that USDC and USDT and USDC for a brief period depegged. So here you see that USDC went almost down with 12%, so all the way down to 88 cents, and USDT went down to 95 cents. But you know, the whole point of stablecoins is that it should be more or less around $1 and not depeg, because especially with this PTSD or with this very traumatic experience, very painful experience in the market, when people see that a stablecoin starts to depeg and go lower, then they start to panic sell, even if they need to sell their stablecoins at a loss. They know that there have been instances in the past where stablecoins went all the way to zero. So in order to do damage control, they prefer to, sell it and move it elsewhere. So now the question is, do we need to worry about a similar situation where USDT, in this case, because this affects mainly USDT, could USDT depeg and could this create a bigger risk for the market? Well, that's what we're going to cover. I found this funny meme on the internet. It says, America innovates. We've got companies like Tesla. Then we have China replicates. They simply look at what's working really well in America and the USA. And then let's copy it and make it better, faster, cheaper. And then Europe regulates, all right? I'm originally from the Netherlands and I fled my country. I migrated in 2020 because I saw that slowly but surely my country and Europe as a general is slowly going down the hill because they're not innovating, they're only regulating and creating more rules and regulations, more bureaucracy. Hundreds of years ago we were the center of world trade, we were the center of world power, the center of finance. Now we're nothing, we're just the center of bureaucracy and regulation. And that's also what this video is about. Because MiCA, which is a new legislation by the European Union, it stands for Markets in Crypto Assets Regulation. That is the whole abbreviation, MiCA. Now, why do we need this? Why do we need this? Well, the European Union consists out of many different member countries. And all of these member countries right now have their own individual laws and regulations regarding crypto. Now, the EU wants to form this wants to consolidate this into one unified framework on how they should regulate crypto. So yeah, exactly. So the issue is that all of these countries have their own individual laws and regulations, and their solution is to make one unified framework. And here's an important thing that we need to emphasize. The whole idea is that they want to make it safer for the average investor. Now, this is a good thing, I believe, because we are still very early in the whole crypto industry and the whole evolution of the sector. And for the past few years, there was a lot of uncertainty and unclarity about how this sector would be regulated. And the market doesn't like uncertainty. So now with these new rules and regulations, at least we're going to have some clarity on how this is going to be regulated. So that's going to be nice. So the key objectives of this MiCA regulation is to provide a legal framework for crypto assets, to establish a set of rules for crypto asset services, to become the primary legislation for crypto companies to follow, and to establish specific rules for stablecoins. Now, this final pillar is, of course, what we're probably going to talk about the most in this video. So all crypto companies that provide services to the EU must comply with this MiCA regulation. This also means that even if they are based somewhere else, let's say you're based in the Cayman Islands, or you're based in the US, or you're based in Dubai or Hong Kong, but you're providing services to Europe, you still need to comply with this MiCA framework. So let's talk about the definition of a stablecoin. A stablecoin, by definition, means that the value of that coin is pegged 1-to-1, or according to a fixed ratio, to another asset. In this case, the stablecoin USDT is pegged to the dollar. It should have a 1-to-1 peg with the dollar. Now, how do stablecoins work? Well, let's talk about it. So a user sends USD to a stablecoin issuer. Then the stablecoin issuer deposits this USD at a bank. These USD reserves are held in cash to meet short-term liquidity needs. So yeah, basically all of it is stored. And then the remainder of the reserves may be invested in very short duration government bonds and other cash equivalent yield-bearing assets. So for example, treasury bills or stuff with short duration, few months, 1 year, just to make sure that the money doesn't lose value due to inflation, so they can make a small return with a small percentage of the treasury, but most of it is held in a combination between these USD reserves and short-term bonds and cash equivalents. Now, this money is stored by these banks and these issuers of stablecoins, and then in return, the user is provided with a stablecoin, which is proportional to the value of their initial deposit. So if you've deposited $100, then the stablecoin issuer will store that partly in cash, partly in short-term duration bonds and cash equivalents to make a little bit of yield. And at the same time, the user is paid back $100 worth of stablecoins. Then this will be on the blockchain, and then the user can transact on the blockchain with those stablecoins. So the whole point is that you move fiat money, which is outside of the blockchain, onto the blockchain through these stablecoin issuers. So that's the whole flow of these stablecoins. Now, there are multiple different issuers out there. We have USD coin, which is issued by Circle, Gemini dollar, which is issued by Gemini, Paxos, True USD, Tether, and there's a few more. Even Ripple is coming out with a stablecoin right now. And I do believe it's good that there's multiple different issuers out there. I think diversification is always great. I also believe that competition between these stablecoin providers are great, so that they keep innovating and making sure that people have the best possible product and service that they can give to the market. Now, there's something very particular about Tether. It's a very controversial stablecoin, USDT. Why? Well, let's go through these reasons. First of all, USDT, it is very widely debated whether USDT, so Tether, actually has a one-to-one backing by real assets. They claim that they have done so. However, there's no comprehensive public audit that has ever been conducted and proven that it's really one-to-one backed by the dollar. So what are we talking about? So when you deposit $100 to Tether, do they really have all of this? Do they really have all of these reserves? That if, let's say, all of the USDT holders right now would go to Tether and say that they want to redeem their USDT and want to get back their dollars, does Tether have enough to actually deliver on those redemptions? That's a big question. Because some believe that Tether has been just printing USDT out of thin air without having any backing, and as a result went on some kind of shopping spree to buy Bitcoin, treasury bills. In fact, USDT is one of the biggest holders of government bonds and treasury bills. So it's crazy. Now, but then the question is, do they have enough in order to meet all of the entire redemptions of USDT in such a particular scenario? So the fact that they own a lot is known, but do they own enough collateral for the entire USDT that's in circulation? Now, the next controversial point about Tether is that Tether has faced regulatory fines, such as a $41 million settlement with the CFTC in 2021 over misstatements about its reserves. Allegations of undisclosed losses and inadequate financial safeguards have also raised concerns. And finally, USDT accounts for a very significant portion of global crypto trading pairs. So any disruption to its stability could have a massive ripple effect across the entire crypto market and maybe even the entire financial market. So yeah, there's a lot of controversy around USDT. Now, when we look at the entire stablecoin market, we see all of these different issuers, USDT, USDC, DAI, and all of these other coins. But by far, USDT is the largest stablecoin out there on the market by market cap. They have a market cap of somewhere around, $120, $130 billion, maybe at the time of recording this video. It might even be higher. So imagine that if something goes wrong with USDT, then the whole stablecoin sector might be screwed by that. And as such, also the entire crypto market, because stablecoins are an essential part of the crypto market. They provide safety and security. They should provide safety and security, stability to people within the crypto space to hedge themselves against all of the crazy volatility within the crypto market. So when we look at PwC, they also wrote an article about this new MiCA regulation. They're saying European regulation has huge impact on crypto assets. So there's going to be a legal framework for stablecoins. And part of that is that the issuers should have a registered office in the EU. They need to build up sufficiently liquid reserves with a 1-to-1 ratio, and partly in the form of deposits. Again, that comes back to this. So they need to have enough collateral that in case of redemptions, they're able to fulfill those redemption requests. You can almost compare this to a bank run. Let's say that you believe that a bank is going to collapse. So you're going to go to the bank tomorrow morning, first thing, to pull your money out of the bank. Let's say that people believe that USDT is going to collapse and they want to get their money out of USDT and they want to get their dollars back. Well, does USDT have enough backing of collateral in order to fulfill those needs? So that is going to be one important component of these regulations. They really want to make sure that it's all not based on thin air and that there's really enough reserves in place. And the final pillar is that every stablecoin holder, offer every stablecoin holder a claim at any time free of charge. So you should be able to redeem your stablecoin free of charge, with the rules governing this reserve also providing adequate minimum liquidity. Interesting. So yeah, those are part of the MiCA framework that stablecoin issuers need to comply to. Now, Circle, the issuer of USDC, is one of the most compliant stablecoins. They're known as the issuer that works together with regulators to become the best kid in the class. So they have two they have this stablecoin USDC, which now is licensed according to MiCA's framework. And they're also planning on bringing out a EUR-C stablecoin. So that's going to be a stablecoin back to the euro, which also already has a license within the MiCA framework. So USDC is actually licensed within this framework. So they're compliant. Now, USDT, on the other hand, announced that they are not looking to comply with these MiCA regulations. They don't care. They don't want to comply. Maybe even because, you know, one of these requirements is that they need to be one-to-one backed by actual reserves or actual assets so that people can redeem their stable coins. So they don't want to comply to those rules. So they don't want to get a license. So the big question is, if these MiCA laws come into force, which they have already come into force, we'll get into that in a bit. Will that be a very big threat to USDT? Does this mean the beginning of the end for USDT? Well, USDT for sure has some risks that it's going to be delisted across EU centralized exchanges, because they also need to make sure that they comply to this MiCA framework, and as part of this MiCA framework, they can't offer stablecoins on their platform that are not compliant. So for EU users, this might be delisted on many for European users, USDT might be delisted on these exchanges. Helen Part says, EU silence does not make USDT MiCA compliant, says an exec. While MiCA's implementation phase is ending on December 30, 2024, which was not that long ago, there is also a transitional 18-month phase in the MiCA, in MiCA's total 36-month timeline. So here, when we zoom out, we saw that MiCA recently entered into a new phase. So we saw that MiCA came into existence 18 months ago. Then there were a bunch of different deadlines, and now there's an 18-month transition phase during which exchanges and crypto companies and stablecoins can still opt into the system, gain licenses, make sure that they get all of the right stuff in place in order to be compliant. Now the question is, will USDT actually do that? It seems like they are not interested in complying with this framework, but there is still an 18-month time window in order for actually the final deadline to be passed. So within this period of 18 months, you shouldn't be that worried. Not much is going to happen. Some exchanges might actually delist USDT before. But yeah, what if USDT does not get a license? Well, what I mentioned before, it might get delisted from EU exchanges, and then most likely EU exchanges or international exchanges which require their participants to do KYC, so to upload a copy of your passport or your ID. But keep in mind, there are also non-KYC exchanges within the EU that will continue to offer it, because this MiCA regulation only applies for EU citizens, for EU members, EU citizens. So Binance has global operations. Bybit has global operations. Many other exchanges have global operations. But as soon as you KYC yourself and you tell the exchange, hi, this is my name, this is my proof of address, I live here, this is my passport from this country, then they will be able to categorize you as a EU citizen, and that might mean that you don't have access to USDT. In the case that some exchanges will just delist USDT, oftentimes they will probably just convert your USDT to USDC, probably on a 1-to-1 ratio. So even that won't be the worst case. But there's ways around again. So if you're an EU citizen and you want to make use of USDT, then just make use of exchanges that don't require KYC, or maybe decentralized exchanges like Uniswap. And non-EU investors will not be impacted by all of this. So if you're based in the States, if you're based in whatever, Indonesia, Hong Kong, Singapore, Thailand, whatever, then this does not impact you, okay? So all in all, if I would have to give you my conclusion, I don't think it is going to be a very massive impact for USDT. It will still be available in Europe, at least with some workarounds. And even if your USDT is going to be delisted on these exchanges will probably convert it one-to-one to USDC. Here, a Binance spokesperson said that the exchange announced its approach to non-MiCA stablecoins in June 2024. And with non-MiCA stablecoins, USDT, that's what they mean. And there will be no changes until any further notice. So USDT remains supported for custody. So meaning that if you still have USDT on the platform, you can still deposit and withdraw it. However, you can't probably trade it. Nonetheless, we encourage users to use USDC and 𝗗𝗶𝗀𝗶𝗺𝗿 as these are MiCA compliant stablecoins. So they're giving you this warning ahead of time. So maybe in 18 months from now, when the final deadline has passed, maybe they will enforce these rules a little bit more strict. But so far, if you have USDT, for example, on Binance, then you will still be able to deposit and withdraw. But they're telling you, like, guys, just try to think a few moves ahead. If you can, maybe use USDC and 𝗗𝗶𝘀𝗰𝗋. Now, Chris Crypto, another famous KOL in the crypto space, he's saying on December 30th, USDT will be delisted from EU exchanges. Well, this is an older message. He posted this on December 27th. It wasn't really the case that EU exchanges delisted USDT on the 30th of December because there was this grace period, this transition period of 18 months. So they don't have to do this. They can wait for 18 months until July 26. July 26 is probably going to be a lot more interesting. So in 1.5 years from now, maybe a lot bigger changes will happen. We still need to see how everything is going to take form, whether maybe USDT still is going to reconsider complying with these rules and regulations. Also how exchanges are going to delist USDT, but on the short term, yeah, we still have time, I would say. So he's saying not spreading the FUD, but why not diversify your USDT in a few different stablecoins? So he was actually spreading FUD because USDT was not delisted from exchanges right away on the 30th of December. However, he makes an interesting point saying that why not diversify your stablecoins if you have the option? So what is probably the best second option, the best alternative to park your money in if it's not USDT? Well, it's probably USDC. Like I mentioned before, USDC is MiCA compliant. It works really well with regulators. It's very compliant in most jurisdictions. So when you compare USDT to USDC, well, USDT has a bigger market cap. USDC has a lot more transparency about their reserves, so it's one-to-one backed, and this is audited, and there's a lot of proof. USDC is also more compliant. The price, of course, both of them are one-to-one backed to the US dollar, or should be one-to-one tied to the US dollar. Transaction volume on USDC is apparently higher than USDT. So despite a smaller market cap, it has a higher transaction volume. Probably because a lot of institutions are making use of USDC because it's more compliant and institutions do a lot of trading volume. So growth, USDC is growing faster, especially in the international market, probably because of this MiCA regulation too. Both had some depegging incidents in the past. That was what we opened this video with. So we saw that USDC and USDT both dropped when the news came out of Silicon Valley Bank's collapse. And then longevity. So USDT has a longer track record than USDC. It was one of the first projects within the crypto space. One of the first big projects in the crypto space. It was a very big game changer. They've been around for a long time. USDC came into existence a bit later. So it has a longer track record. But now that you know all of this, I would say, again, let's recap. I don't think there's a big reason right now to worry about USDT. The European market is just one smaller segment of the entire global ecosystem, the entire crypto system that USDT is part of. And even if you are based in the EU, there's ways around If you are making use of decentralized exchanges or non-KYC exchanges, you can still make use of USDT on those exchanges. And even if these exchanges are delisting USDT or making sure that you can't trade in USDT anymore. So for example, Binance still allows custody, so depositing and withdrawing. Other exchanges might delist USDT but convert your holdings to USDC. Again, I don't think it's that big of a worry. But if you want to think a few moves ahead and you want to park your wealth into a stablecoin that's compliant with MiCA, then you might as well allocate some to USDC, which in my opinion, I think is a great alternative. So I'm curious to hear your thoughts in the comments below. What actions are you going to take in order to, in order to work with these new MiCA regulations, in order to protect your wealth from potentially a collapse of the crypto market, if you even believe that's a possibility. And also, if you enjoyed watching this video, then make sure to smash the like button. It will be good feedback for me to know that you got good value out of it. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of all of the crazy stuff, all of the news updates, everything that's happening in the crypto market. My goal is to make sure that I help as video. Peace out, take care, and I will see you in the next one.